Hi everyone, more Brockhaus Technologies information coming at you today. This is the follow-on from my previous Q&A. I've got a lot more questions to answer here, so I'm just going to dive straight in, I think. So the first question I have is, your valuation is off. Okay, firstly, my valuation work is going to take some explaining. But first, I bought my shares with Interactive Brokers. They gave me access to Brockhaus Technologies, which was great. I don't think many brokers in the world would give you access to them, being a small German company. I also keep track of my valuation work on Brockhaus Technologies in my email list. There's a link in the description for that. It's called Yes Stocks, No Stocks. So here's some of my valuation work for Brockhaus Technologies, and I've just put the current revenue in that they reported in 2023, and I'm growing that out at 15%. Now, they're actually targeting to grow at about 25% per annum for the next 2 years. I'm just wanting to be a little conservative, saying that I don't know the future. So I'm trying to slow that down a little bit just to be a little bit on the conservative side. I can play around with this later, but I'm just putting it here for the moment. And the next thing I needed to talk about was the estimated free cash flow margins. So this includes the 52% ownership of bike leasing, taking that into account, which means there's 48% of bike leasing that we don't own as shareholders. So why I think at the moment in 2023, the Brockhaus Technologies free cash flow margin attributed to them is actually only at about 10%. And I'm actually going to say that this expands out to 18%. So why do I think the margin will expand? Well, the reason is because bike leasing is in a land grab mode at the moment. They're trying to get as many corporate customers on board as they can against JobRad, who is their main rival in the space of bike leasing. Essentially, all the resources are going into just flat out growth mode it's a land grab, essentially, of what's happening here. Because once they get these clients onboarded, and their employees have leasing agreements through bike leasing, then that's going to be very sticky, and they can upsell them other things into the future. But right now, the margins are a bit slimmer than they should be because they have to go be aggressive. They're actually still making really great money and really great margins, as you can see with Brockhaus Technologies still having great revenue. I think this is actually only going to increase in terms of free cash flow, like what falls down to the bottom line for them. Hence why I think this is going to improve. So essentially what I'm saying is the bike leasing expansion it'll wind down at some point in the future. It won't be as aggressive as they're taking it now. Therefore, margins will expand, in my opinion. I also think that IHSE is going to continue their margins. They're increasing their margins each year for the last couple of years. I think that trend is going to continue upwards as well, pushing free cash flow margins for Brockhaus even higher as well. Now, I also think margins will expand because since Brockhaus Technology is, as you can see with the market cap being only 240 million, they've got corporate costs, right? There's 10, 11 employees now, I think, at head office. That's going to not grow at the same rate as the business grows, like as bike leasing and IHSE grow. So as the corporate overhead costs stay similar, as a percentage of the business, it's going to become less and less as those other businesses grow and grow, if that makes sense. So the margin should also improve because the cost in relationship to the revenue is going to be better. So free cash flow should improve in that way as well. Hence why I think going from 10% to 18% in the next 5 years is very feasible. I could even be conservative on that, but I'm happy with 18%. Okay, I think that explained that as clearly as I could. Then I've got multiple. So the future free cash flow to market cap. And I've looked at some comps here. I've got Halma, Roper, Judges, and Vitek over here on the side. Yes, they're more experienced. Yes, they've got bigger track records in public markets. They're better businesses. But I would argue in 5 years' time, Brockhaus Technologies could warrant at least a 15. That's half of what these companies are. I would say it could be even 20 if they can prove themselves to have growth rates of 20% plus, 25% plus. That multiple could easily be higher. So I'm going to be conservative and say 15 is probably very fair for the business. Probably a little bit on the low side. Okay, now I've got the dilution rate of 1%. Now that's not the case of what's been happening lately as they've been buying back stock. They bought about 4% of the stock outstanding back last year. And so shares outstanding, I'm assuming, is going to grow at 1%. I'm just saying that buybacks are not going to happen anymore. And this is not factoring in the dividend either that they've just announced, a small little dividend. It's only like 0.5% or something, 1%. It's quite small. But I'm getting a 5-year compounding growth rate here with these numbers at around 32%. So that's how I'm doing a valuation of this. Like I said, I think revenue could be growing a lot higher than 15%. I think the multiple could be higher than 50%. I even think margins could be 18%. I think is, it's going to go from 10 to 18%. I think it could even go higher, but let's call it 18%. I'm not factoring in acquisitions here. So yeah, this is my thoughts on valuation. So if I feel good about the free cash flow margin improving from my estimated 10% to 18%, with growth at around 15% of revenue, then I can see 65 to 70 million in free cash flow in 5 years' time. Now, that's not factoring in any new acquisitions, no more share buybacks, no more dividend, and not allowing them to grow more than 15%, which they're projected to grow at 25%. Themselves said they can grow at 25%. I think they could even be underselling the 25% growth, because I think bike leasing could just really grow at high speeds, and then IHSE, them improving as well. Anyway, I thought I was conservative at 15%. I can see why I wasn't as conservative from the 10 to 18% margin improvement, but I think that's what's going to happen with mature margins. In an early tweet I made on Brockhaus Technologies, I said enterprise value to EBIT was maybe an okay metric to use here. It's probably not ideal to judge it on EV to EBIT. I probably made a mistake here. I'm okay with owning up to that one. I think it actually could be a helpful tool in putting on a multiple of a business to compare it to other businesses. In hindsight, I probably should have explained all of that. The tweet was quite limited. Anyway, let's use free cash flow moving forward. That's what I'm going to try to focus on. I think I've thought about this enough now that I think free cash flow is the right way to go with all the adjustments in the P&L. But anyway, back to the big picture here, which is I see so many ways to grow. More corporate customers for bike leasing. There's a long way to go in Germany and Austria. Offering more benefits with that acquisition of Pro Bonio as well is going to really help bike leasing, not just offer bikes. Expanding into neighboring markets is on the agenda. It's already strongly profitable. So yeah, there you go. How does bike leasing generate revenue? So bike leasing earns commission from financing and insurance on every leased bike it brokers. So the corporate client doesn't pay bike leasing. The customer gets the benefits, of course, paid out of their pre-tax income if they choose. The bike shop doesn't pay any fees either, so they love bike leasing, bringing in people to sell bikes to. So insurance and financial entities get a lot more clients, and that is worth paying bike leasing for those customers. They also do a lot of the financing themselves in-house. To be specific, I think they do 75% of the financing in-house, and I think they sell off 25% to other places to get help. Is cyclicality a risk here in the bike leasing business? So the contracts last 3 years, and in 90% of the cases, those bicycles are being taken over by their actual users. So how long will most end customers ride these bikes for before they maybe get a new one via a new leasing contract? Because let's say your average customer rides a bike for even 7 or 8 years. Some level of saturation may be hit more quickly than shareholders would like to see. Although I do understand that the runway is quite long considering the current market penetration. That was a big question. Okay. I think it makes sense that 90% of people keep the bike. It's not like a car. A bike doesn't cost you money to run. So once you own it, it doesn't really cost you anything. I'd only buy a new bike if I was super into road cycling or something like that, or I wasn't happy with my previous bike. But I think once you've got a bike you're happy with, you just keep it for a long period of time. So yeah, I do think they're not going to get new leasing contracts. I do think there is a lifespan of the customer. That's why I think the acquisition of Pro Bonio is really important, because those additional things you can keep leasing out. Once they've had a good experience with the bike, you can start leasing other things to them as well. So to answer that question more clearly, yes, I do think there is a lifespan of the customer. I do think that is not ideal. The performance of IHSE over the past years also seems to weaken, with their EBITDA margin shrinking a lot. So COVID was tough on IHSE, but it's trending nicely in the right direction post-COVID. I think it'll continue to improve and it'll turn out really well. I go through IHSE in my part 2 video of Brockhaus Technologies if you're wanting more analysis on that. I wouldn't be surprised if bike leasing is publicly listed within the next 5 years. CEO says this is a possibility in a comment from 2022. The current value of Brockhaus's 52% of bike leasing is greater than Brockhaus Technologies' enterprise value. Undervaluation is there, it's just a matter of time. My answer to that is, well, it's not really a question, but yeah, I think that's a real possibility that they publicly list bike leasing. I guess we'll see. I haven't factored that in at all, so that's cool upside. I think it'll get a pretty reasonable multiple if it's got strong growth rates and the high margins that it's been running. So yeah, let's just see. I guess that's a nice kicker. Brockhaus seems to be more of a private equity player with planned exits versus a permanent capital vehicle. Or did I misunderstand this about the company? No, you didn't misunderstand this about the company because it was like this in the past. That was their background in PE, private equity. But the change has been made to be more long-term as they don't want to sell their good companies anymore because of private equity expectations and mandates and rules and things like that. They have a long-term shareholder view now. This hasn't been proven yet because it's only been a few years. So it is just words right now. But based on that, it's obvious that they've made that transition. Do they sell something off in the future if it doesn't quite fit or they don't see the growth anymore? Maybe. Time's going to tell, but that's not what they're saying. They want to hold these long-term. They want to be the serial acquirer model. They also booked a special income of $48 million in 2022 for discontinued operations. What was that? Never trust an ex-PE guy. So that $48 million specifically was the selling of Palace to Indutrade. They don't want to sell great businesses anymore. Time will tell whether that's just words or whether that's the truth. But the Indutrade deal was actually pretty epic. They got like a 6x return in just a few years. The commentary around was it just maybe didn't quite fit. Plus they got an epic valuation for it from Indutrade. Yeah, it made a lot of sense. So I guess we just have to wait and see on that one. I think I'm okay if they do sell something for big, high valuations, but that limits them in the acquisition potential in the future. I'm not really sure how to think about this exactly yet. I'm going to just play this by ear and see what they keep saying and see how the actions unfold. Are they decentralized in decision making? So this is a great question. My understanding is that it's guidance and financial help from Brockhaus with the CEOs from like bike leasing and IHSE still fully involved and like complete CEOs. It appears to be a team effort though, rather than a full hands-off approach, not like Berkshire Hathaway where you just get a report on the financial metrics and how it's going and that's it. This is definitely something I'd like to discuss with the subsidiary CEOs one day to see how they feel about head office and Brockhaus's involvement. But my understanding is that it is guidance and financial help and it's a little bit more involved. I think they're just really excited about something like bike leasing growing so much further that it's such a great investment for them, for everyone involved to just push this thing hard and grow it big. So yeah, at the moment, it does feel like they're working pretty hard in bike leasing and IHSE. Again, they've only got 2 subsidiaries. I guess they've got the time. So yeah, decentralized decision making. I would argue that it does have full responsibility at the end of the day on the CEOs, but yeah, it's not as decentralized as others. I can't tell you exactly why, but to me it seems the company is a clown show. When they went public, their C-level salaries were way too high. They also spam the market continuously with no news in a very salesy language, like extremely profitable and BS like that. Okay, so my take on this is that there is a comms person at Brockhaus Technologies, so I imagine the comms person is writing the press releases. I don't know if it's fair to judge them based on that, but yeah, I guess it's part of the business and that's part of what they're putting out there, so I guess you can judge away. I also don't know whether things translate very nicely from German to English as well, so take the language used with a bit of a grain of salt there. That's how I'm sort of thinking about it. $1.4 million for Marco, which was about 50-50 between bonuses and base salary, and about $570K for Marcel. I don't think this is that high for a business like this, but both have a lot of skin in this business, just like me as a shareholder. So 30% of all the shares are with Marco, and Marcel has plenty as well. Regarding spamming news, well, like I said, they have a comms person. I don't really see the spamming news here like you see it. I like that I get informed about the acquisition of Probonio, for example. That's important to me. But hey, if you think this is a clown show, okay, maybe I'm wrong. How does this go wrong? So this is a bet on bike leasing. There could be regulatory issues that interfere with bike leasing or IHSE for that matter, hiccups with the business, departures of CEOs and management teams and things like that, any scandals. There is a lot of concentration risk here, so that's how it goes wrong. Now, I want to also thank everyone for the contribution and of those who commented on Twitter, those who reached out to discuss this with me on Discord. I'm not perfect. You should do your own thinking. I'm putting this idea out into the world as there's no coverage on this outside of some small forums in German. Let's see how this all unfolds. I understand the bias I'm creating by putting my name to this idea. But hey, like I've said before, risks exist in investing, and as investors, we get paid to take calculated risk. All right, see you in the next video.